Good morning, traders. As we commence this week, several developments are shaping the commodities landscape. Gold prices have surged, nearing the $2,900 mark per ounce. This uptick is largely due to a weakening US dollar and ongoing geopolitical tensions. President Trump's recent announcement of reciprocal tariffs has heightened global trade uncertainties, prompting investors to seek safe haven assets like gold. Additionally, discussions involving U.S. Secretary of State Marco Rubio in Saudi Arabia aimed at resolving the Ukraine conflict are influencing market sentiment. If you are trading in gold, consider capitalizing on the current momentum by maintaining long positions. However, stay vigilant for any geopolitical shifts that could introduce volatility. Oil markets are relatively stable, with Brent crude trading around $74.73 per barrel. The market is closely monitoring potential peace negotiations between Russia and Ukraine, which, if successful, could lead to the easing of sanctions and an increase in global oil supply. President Trump's indication of upcoming talks with Russian President Putin add a layer of complexity to the market dynamics. For those in the oil sector, it's prudent to adopt a cautious approach, monitor diplomatic developments closely, as any progress could lead to increased supply and potential price adjustments. China's recent imposition of a 15% tariff on US coking coal is set to reshape global trade flows. This move is a direct response to President Trump's tariffs on Chinese imports. As a result, Chinese steel manufacturers may pivot to suppliers in Australia and Canada, potentially driving up prices due to increased demand. If you're trading in coking coal, anticipate potential supply shifts and price volatility. Diversifying sourcing strategies and exploring alternative markets could mitigate associated risks. LNG prices in Europe have also risen sharply, surpassing those of Asia. This surge is attributed to Europe's effort to replace Russian gas supplies and the onset of colder temperatures. However, these elevated prices may dampen demand, prompting considerations for governmental interventions to secure adequate winter supplies. For LNG traders, it's essential to assess demand elasticity in response to rising prices. Engaging with policymakers and stakeholders can provide insights into potential regulatory measures that may impact the market. The geopolitical environment remains pretty fluid. President Trump's proposed tariffs have introduced uncertainties in global trade, with potential retaliatory measures from affected nations. Additionally, the possibility of US-Russia peace talks concerning Ukraine could lead to shifts in commodity supplies and prices. Traders should maintain a global perspective, staying informed about diplomatic developments and their potential ramifications on commodity markets. In summary, the current commodity market is influenced by a confluence of geopolitical events and policy decisions. Staying informed and agile will be key to navigating the complexities of the week ahead.